Hello and welcome to the session Open Banking, Open Finance Goes Global. My name is Brendan Jones and I'm the Chief Commercial Officer of Consentus Limited. Firstly, as we start, let me give you a quick introduction to the Consentus Group. The Consentus Group comprises of Consentus Limited and also Open Banking Europe, which is also made up of Open Banking Exchange. Consentus Limited provides open identity and regulatory checking services to protect our customers and partners from the risk of open banking fraud. Open Banking Europe, SAS, and Open Banking Exchange champion innovation, competition, and efficiency through the OBE community initiatives, engaging all stakeholders in the open banking ecosystem. As an organisation, we're headquartered in the UK. We also have an office in France, but also extensive operations around the rest of Europe and are now spreading out across the world. As a company, we're made up of experienced payments and financial services professionals. We've learned basically how to manage the gap between regulation and reality, which is really between theory and practice. We recognised in the journey on open banking that it's perfectly possible to be compliant with regulation, but not secure. When running a business founded on trust, obviously it's essential to be aware of the risks of giving third-party providers access to customers' accounts and data. That's why we founded Consentus in January 2018 and have dedicated all our energy into helping the open banking ecosystem to be both open and secure, supporting the players within it to transact with confidence. Earlier this week, we actually announced the launch of Open Banking Exchange into the LATAM region. And Open Banking Exchange is predicated off Open Banking Europe, where we have a community that has been brought together for a membership community for collaboration and discussion on open finance and open topics. Obviously, within Europe, we started with open banking many years ago, and there are many lessons learned that we have overcome through the journey to open banking and moving on to open finance. And that can be shared with other countries around the world as they engage and drive their open banking programs. As an organisation, we have over 600 customers and partners that we operate within the European Union. As you can see from the list of just a sample of our customers here, we've got some of the largest banking groups that operate across the European Union and also some big American organisations as well, right the way down to small startup challenger banks who are now entering into the market, delivering new innovative offerings to customers via open banking channels. So let's look at open banking. It really is becoming a global movement. Very much started within Europe when we had regulation laid down by what is termed as the Payment Services Directive 2 to allow customers to share their information with other organisations known as third-party providers. And from the laying down of that law within Europe, we've now seen open banking start to very much become a global movement, with many countries around the world looking to adopt similar practices to that we've implemented within Europe. However, within Europe, we really did just start with open banking. And what we've seen with other countries around the world, as they move towards what we call open banking, it is much broader in its application. And really, it should be called open finance, because open banking in the EU is very narrowly defined to transacting payment accounts. But obviously, there are many other types of financial accounts out there, and open finance is a much broader initiative to include every type of account that businesses and consumers may have. You can see on this slide there's two colours to the open banking implementations that are taking place, and that very much is driven around whether countries are implementing open banking due to regulatory driven measures or whether it's market-led implementation. Obviously, in the EU and the UK, it was very much regulatory driven through the Payment Services Directive 2 that I mentioned earlier. But we're seeing in other parts of the world, for example, within Asia, it's very much being a market-led initiative, which means that from a regulatory standpoint, it is much more a light touch environment whereby regulators are just maybe specifying a few, delivering specifications for APIs, for example, opposed to building whole ecosystems, which we see within the UK, where we have a central entity that manages and monitors the whole of the ecosystem. In terms of open banking and open finance, there are really many different drivers which are driving countries to implementing open banking and open finance. There's customer demand, democratization of data. Customers want to be able to share their data with other financial providers, whether that be a recognized bank or whether that be one of the new innovative fintech organizations that are coming into the market. They want to be able to share their data so they can drive better financial outcomes for themselves. Too long have the incumbent banks had control over the banking ecosystems, and now we're seeing open banking as a force for good, driving competition, driving innovation in these new markets, ultimately delivering better financial outcomes for the users of the system, whether that be consumers or whether that be businesses. We see open banking assisting with economic growth within countries as well. Too long have old traditional payment systems, for example, been in place that have very high costs associated with them. And under the umbrella of open banking, where we're seeing account-to-account payments or payment initiation, as it's more commonly referred to, we can see payments can be executed in real time. So there's benefits for the both participants within the payment chain. The data for the payment can be linked to the transaction, giving greater richness to the banks and so on and the merchants. Instant liquidity within the payment transaction as well. All importantly for a fraction of the cost against using traditional payment channels that exist today, for example, cards, credit cards, debit cards, whatever it may be. Probably the biggest change we're seeing, especially within Europe, the regulation within Europe PSD2, one of the visions was to drive innovation and to increase competition in the market. And open banking has definitely delivered that today. Within the European Union today, we have over 480 regulated third-party providers, fintech organizations that are delivering new financial propositions. On top of this, we have, of the 5,000 credit institutions or banks within Europe, over 1,500 of themselves now operating in this third-party provider capacity. So this now drives for greater competition in the market, greater choice for the consumer, and ultimately better pricing. Financial well-being and financial inclusion are obviously massive drivers for many countries around the world. And I think from the exposure, for example, I've seen within the LATAM region, where we see open banking or really open finance now coming to the fore, initially with the first initiative in Brazil, but with Mexico, Colombia, Chile, other countries looking to follow suit. The real driver here is about financial inclusion and well-being for all the stakeholders and for consumers, and getting more and more people engaged in financial services to drive better financial outcomes. So if we look at some of the success metrics that we've seen within the EU, open banking itself, or access to accounts as it was commonly referred to in the regulation, actually only came into force on September the 14th, 2019. However, since that point where it's come into force, we've got 474 TPPs on the slide here. It's actually over 480 now. These numbers increase on a daily basis. In the UK alone, where we can measure the number of open banking transactions that are taking place on a monthly basis, for the top 9 banks alone, there was 795 million transactions, open banking transactions conducted in March of 2021. And of these 795 million transactions, 99.9% of them were for account access, because account-to-account payments is only now just starting to take off in the United Kingdom. And if we include the whole of the UK economy, open banking economy, actually the number is more like 1 billion transactions which have been conducted across the whole of the open banking ecosystem. So from being a very niche product in the industry, open banking is now starting to become much more mainstream for all to see. We have 43 plus third-party providers who operate now across all EU countries. The EU is a slightly different arrangement to many other countries around the world, in such that there is the right for third parties to be able to what's termed passport their services into other jurisdictions within the European Union. So today, some countries in the EU may not have any third-party providers who are regulated at a local level. However, every country has third-party providers now operating in it through the right of passport of organisations from other countries. As Consentus, we publish on a quarterly basis what we term as our third-party provider TPP tracker across Europe, where we look at the number of TPPs in the various countries and so on. And on this slide here, you can see all the EU countries that are there. And you can see there's a light blue box. The light blue box is the number of third parties who are regulated in that particular jurisdiction. We call it their home state. And then the red boxes are the total number of TPPs that can operate in that country. So if we look at the top, for example, top left, where we see Norway, Norway has regulated 7 third parties to operate in Norway. However, there is another 59 that have the right to passport their services into Norway and provide services to consumers directly. What we're also seeing within Europe as well is roughly 30% of transactional traffic now is all cross-border. The majority, as I mentioned earlier, is all about account access today. But as we move to account payments, payment initiation, those transaction volumes are going to significantly increase over the coming months through 2021 and onwards. In the UK, we have a slightly unique setup compared to the rest of Europe, in such that we have a central entity that monitors the transactions and open banking for the top 9 banks in the UK. And the figures that you see in front of you here are the increase in transaction volumes from June 2018 through to March 2021. These numbers represent roughly 80% of the transactions that are processed, because for the rest of the market, you can add another 20% to the numbers that you see here. And again, I mentioned this is predominantly account information transactions opposed to payment transactions, which will come later this year. But you can see there's a great adoption as we move forward. And in the UK, roughly 3 million people use open banking services within a given month. That equates to roughly 5% of our banked population. And in the UK, we have a population roughly of 65 million, of which 48 million are banked. So we can take those numbers and we can extrapolate how those numbers will also play out in the various EU countries. So you can see, for example, on the left-hand side of this slide here, DE stands for Germany. It's the largest country within Europe in terms of size of population. and probably also the number of banks that operate within that country. And you can see here that for our forecast for June 2021, which is really only next month, that we'll be seeing 93 million transactions being conducted in Germany, right the way down to the right-hand side, a smaller member state within the EU, CZ, which is Czechoslovakia, will be conducting around 8 million transactions. And these transactions will increase month on month as more people engage in open banking services and new innovative propositions are brought to the market. I think it's fairly clear to say and obvious to say that open banking drives innovation. This slide here, I find quite a fascinating slide. In the United Kingdom earlier this year, our regulator, the Financial Conduct Authority, held a market consultation on open finance. So the move from open banking to open finance, bringing in many more accounts into the ecosystem. And what was interesting was this diagram or this slide was in the consultation process. And it demonstrates quite clearly that regulators are always trying to catch up with the market and innovation in those markets. On the left-hand side, you can see the first column which says envisaged services which have developed. These are the services that the regulator had identified for open banking, quite a narrow subset. In column 2, they are other services that are now operational within the UK, delivered by third-party providers or indeed some banks, that the regulator had not even identified under the umbrella of open banking. And then the third column is other applications that are currently being developed and tested and will be launched within the UK market over 2021. So there is a very vibrant ecosystem, not just in the UK, across Europe. However, Europe is roughly 2 years behind the UK in terms of its market maturity and the volume of transactions and the number of people that are using today open banking services. This slide here gives you a good example of the applications that are currently being offered into the market, utilizing open banking rails. And this really shows the innovation of fintechs out there who are not constrained by legacy technology and can develop very, very attractive propositions to market. We have some of the real obvious ones, account aggregation, where a person may hold bank accounts with a number of different banks. And through account aggregation, they can bring them all together to view them in one place for ease also and convenience. We have personal financial management applications that allow people to be able to set their spend limits, understand more where their money is being spent, to give them greater clarity and understanding of their outgoings and so on. But we also see some very clever applications that are launching into the market, which are attempting to automate established processes to increase the speed, but also to get better understanding, to allow people to make much more granular offers to consumers. An example of this is a loan, an unsecured loan. Traditionally, before open banking came along, you would have to fill in quite a bit of paperwork, present that paperwork, then the lender would go away, would go through a credit rating agency to understand your credit file, your background, and then make decisions as to whether they were going to lend to you. That can now all be automated online, and literally instant decisions can be made by offering the lender the ability to look at your bank account. They can obviously see your monthly income, they can see your monthly outgoings, and they can do real-time affordability checking to truly understand if you are able to take that loan and you can repay it. So some of the more old traditional ways of checking people's history and credit go out the window, because lenders now can see that information in real time, online, can see the last 6 months worth of data, can understand who your employer is, your monthly income and so on. So they get to know the consumer with a lot more detail, a lot finer, granular information and so on. But also, let's not forget business. Business is benefiting, and probably business is benefiting more now from open banking than consumers are within Europe, as businesses can start tying in their accounting services to their bank accounts in real time. They can get much more granular treasury management services available to them that help them with cash flow, expenses and outgoings and so on. So there is a real vibrant ecosystem, and it is only constrained by lack of thought, and there'll be many more applications which will launch over the months, years to come. So let's look at what's required for a successful open banking ecosystem. And we can come on to the structures of open banking's ecosystem in a second. But when I talk about open banking ecosystem in this context, I'm talking about the infrastructure, the framework that allows participants to securely operate within the open banking ecosystem, securely such that it drives confidence of the users who will then want to engage in those services. First and foremost, we need traditionally regulatory oversight and governance. As I mentioned a little bit earlier, some countries have been a market-led open banking initiatives. And in those environments, you have a much lighter touch from the regulators. However, you tend to see pockets cluster together providing open banking services opposed to whole countries implementing. With regulatory oversight and guidance, you can get frameworks and policies that will help create the structures, the rules of the open banking ecosystem is very important, the processes and procedures that all organisations can follow in order to securely operate within this new paradigm. We're seeing the most successful open banking ecosystems predicated off the back of standards for APIs, for example, that all banks can look to implement. And it's really important that standards are implemented on a country level, because if you have every bank implementing its own set of API standards and so on, that really delivers a massive barrier for other organizations who want to attach and integrate to their APIs. Every single bank has to be an individual integration, and that is costly, time consuming, and a massive headache to manage and run on a day-to-day operational basis. There's the APIs themselves, and quite often people just talk about the APIs. The APIs are obviously just the element that's exposed to people wanting to access data. But there's also all the orchestration layer that sits behind that, where we have legacy infrastructure that holds the data. So it's quite a major project that people need to go through. There needs to be control of data and consent management. We need to know what the customer has consented to, with whom, for how long. What sort of data are they able to obtain? Are they allowed to make payments? What happens if the consumer has a change of heart and decides that they either want to revoke that consent and control, or indeed just want to change the definition of it? Trust is the most important thing in the open banking ecosystem. Trust that the participants know who they are transacting with, so they know their true identity, and that they know that they're regulated to provide the services for which they may be accessing a bank's APIs. But that trust then extends into consumers. Consumers having confidence that their information is being collected and used in the appropriate way that they have given consent for. Very important, and without consumers' confidence, open banking ecosystems will not gain the traction and the volume of transactions to make them successful. We have two types of implementation of open banking infrastructure today, and it really falls into two camps. One is where we have centralized directory architectures, and the other is where we have decentralized. Now, directories play an important part within open banking. Typically, directories hold all the information within them of all the participants within the ecosystem, who they are, where they're from, what services are they allowed to provide, and so on. And when a third party attempts to access a bank's interfaces, it's important that that bank can collect that information in real time to be able to ascertain whether the third party should be able to transact or not. In the United Kingdom, for example, we have that central entity, and that's very much the same for the Brazilian model that's currently being implemented today. However, within the rest of Europe, there's a very different approach that was taken place by the regulator, and that was a decentralized architecture whereby banks have to implement their own directory services on a one-by-one basis. Now, arguably, this makes it much more complex to do. However, it is a slightly lighter touch level of regulation that is implemented within Europe from what we've seen, for example, within Brazil and within the United Kingdom. So in terms of Consentus and the directory service type services that we deploy to the market, within Europe, where we have this decentralized directory model, we provide a product called Consentus Verify. This is a SaaS-based platform that sits within the within AWS Cloud, and we collect all the information from all the regulators across Europe, of which there's 115 different registers, and we hold that information centrally. So when a third party attempts to access a bank's interface, firstly, we can authenticate who the third party is, so we know their true identity, and then we can pass back to the bank the regulatory status of that third party, so the bank can be confident in making a decision as to whether to allow that organization to proceed with the transaction. Then we get to a more centralized model, and we offer into the market what we call the Open Banking Hub. And you can see here it's a very different architecture. In the Open Banking Hub, there's many different functional components that are required. Normally within a central model, you have everybody onboarding to the central system. So you need to have all the verification and identity services available for initial registration of the participants into the system. You need to have the ability to deliver digital credentials to them so they can prove their identity when they're transacting with others in the ecosystem. And you typically have to build what we call transparency databases, whereby you hold information on all, such that when there are problems and issues, people know where to go to get information to be able to contact other third parties, for example, to manage disputes which will arise within the ecosystem. So in summary, open banking is really becoming a global movement, and it is revolutionizing the financial services industry. And it's transforming the way that we as consumers and businesses use and manage our data. As we can see, there's different market drivers depending on which countries around the world are implementing open banking. But all of them, without a doubt, are breaking the monopoly of the existing financial services organizations that have, the incumbents that have had the majority of the business over the years. And it's driving innovation and creating opportunity. I think the UK and Europe can show that open banking is becoming a success. With 700 million transactions, actually more like 1 billion in the UK alone, we can see the curve of volume increasing month on month. We're seeing innovation and development coming through into the market through these fintech organizations who understand and know how to use data and aren't strapped by the legacy of existing infrastructure. And all of this has to be underpinned with these trust frameworks that we talked about, because without security within the ecosystem, then there's not going to be confidence of the participants and consumers to use the services. But most importantly, open banking, open finance is delivering opportunity for new market entrants, and that drives competition. It improves choice, and ultimately it underpins better financial outcomes. Thank you very much for your time today. Bye-bye.